All right, everybody, good day. Still here, Daily Market Pulse. It's Monday, February 3rd, 2014. A new month, a new week. Here we go. Market's crashing. They got slammed today. Thought there might be a bounce in order, but quite frankly, no. They sold off aggressively as the day went on, and in higher volume, I might add, and there's really no sign at this point. I would say there's no way. There's capitulation here. There's no way this is a bottom yet. There's more. There's going to be more pain. Now there could be some bounces, but any bounces at this point will be considered essentially essentially like a dip. You're looking for a place to add or get back in on the short at that point. So we're not seeing any buy signals. We're not seeing any reversals. We're not seeing any of that panic selling yet. And the put-call ratio is nowhere near 1 to truly identify a true bottom yet anyway. So it could be a while. We'll have to see. Let's take a look at the charts. So Dow Jones, you can see, was trying to hold for the last 5 days previous to today at just below that 15.8 level. I had that blue line based on the pivot area from mid-December. It held there quite nicely. It threatened on Friday, but held it reasonably well. The bounce, I thought, might come up a little higher based on retracements on fibs, but I think it actually accomplished it on the NASDAQ. So that's why you have to kind of always look at all of the indexes for the most part. I think the NASDAQ pretty much had accomplished that, and so it was just fair game at that point to sell more at that point, and then this is what we ended up with. So flushed to the downside into the 200 on the Dow Jones. That could be an obvious target, but you see that blue line I have there below. That's kind of a trend line that's parallel to the tops from before. That could be where it might actually end up. There's a little bit of a positive divergence and bullish divergence on the stochastic starting. So we may be as much or as little or as much as only 1 day away from a possible bottom. It's possible, but I will show you the put-call ratio here in a minute, and you gauge it for yourself as to what's going on. But we may see something flush lower than that still before we actually see a reversal, potentially anyway. So that's the Dow. S&P looks as such. We're already dipping below the dash blue line. I think this also probably needs to be readjusted. I'll probably have that done later. You can see the series of highs, so that line probably needs to come back down toward the 200. So this may come into 1700, nice round number as well. Although that's really not a pivot area of any kind, so it literally could come all the way into 1600s, 1650 to 1660 as well as a major flush. That's always possible. Again, a little bit of a positive divergence developing, so any kind of a bounce, and it may come back into 1780. That will now be a resistance. That's a change of polarity, just like we saw in the Dow. That will be a polarity area where it's going to come up, maybe test that area. But this is looking kind of on the nasty side, so I'm not quite sure that's going to happen, but we'll see how that goes. Next, NASDAQ. Well, where's my NASDAQ? Okay, there's my NASDAQ. So there, we had a rising window that occurred right into the 8 moving average, and the same thing on Friday before the pullback. That was a 38.2% retracement from the high and the low. So that was the first goal, the first target, in my opinion, that it should have reached. It might have gone to 50%, but it hit the 38.2, almost dead on. So that was it. That's as much as we got. We got a lower open on the gap on the Friday, and then it reversed to the upside, but never made a new high, never recovered. And we have this, obviously, the sell-off now into the lower channel area, the lower trend line. That's an old line. I have to redo those as well. But again, downsides could be down here that was 4,000, right? So we're right at 4,000 now, holding a nice round number with some minor pivot areas and windows right through here. There's a small window right in here, actually, which will have some significance. They always do. So you just always look for the smallest of windows, because they will, believe it or not. Because you can see right here, there was a low right there. Right there. See? That tagged it. So there's a good, strong possibility that could do the same thing, at least a small bounce here. We'll see how that goes. So with that said, just obviously anything lower than that 4,000 now probably flushes into 3850 to 3875. So that's the 200 moving average. Anything is possible. That's all game at some point. So you never know. But certainly 3900, 3850 is first, right? Because that's kind of that's where another window was as well, plus a support area. So it clearly was tested. But we're living now below the 50-day moving average for the first time in a very long time. Think about where we were the 50 moving average. This is where we flushed for a little bit here back in June of last year. So it's been a while since we've been down here, and this is a bigger flush than we had back then. So it was due. It's been a long time overdue, these kinds of corrections. So who knows? We still don't know how deep this is going to go. We'll have to just kind of wait and see. All right, let's look at the TSX. TSX as well, just flushing into the 50-day moving average. This is when one index that's actually right at a polarity. You see all the highs. There was a evening star, shooting star, a bearish engulfing. That created a pivot area essentially, and then a kind of a polarity area. It broke out, came back, tested perfectly the 8 moving average as well, then zoomed up higher, right into the 1618 extension, came all the way back down now. So into the lower Bollinger Band, the polarity area, 13,500. That's a number that's been really instrumental for a long time. So you might expect a little bit of a bounce, a little bit of a divergence here as well. So again, most likely, any kind of a bounce, in my opinion, still will be an opportunity to sell into and go possibly back to this level or lower. This is by no means capitulation. This is by no means some kind of a panic selling, although it's closer to it, but it's not. So we may just flush lower right away, and then that's it, or it could bounce naturally, as I said, in which case you're selling right away. So keep an eye on that stuff. New York Stock Exchange, I showed you before, there's that support area, former resistance, support, 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 boom, see ya. So we had a doji kind of spinning top on Friday and then slammed right into the 200-day moving average. This is another index that you really have to pay attention to besides the NASDAQ because it sort of encompasses the Dow and the S&P simultaneously. So that's a big flush today, and we'll see how things go from here. Treasuries raced higher. We said the target was going to be 134. It hit 134 and went right on through like it wasn't even there. So now 134 will be the support area as a change of polarity at this level here. So it just went right on through. Boom. A little bit of a pause here at the top, a little bearish dichotomy, but just expect that that level 134 is likely to be support. The 8 moving average crossing over the declining 200. The 20 and the 50 are now rising. So there will be a pause at some point because all this has to catch up. At some point, you'd like to see the 20 and the 50 cross the 200, then everything gets really strong, but that could be a while. So it may not even happen. So right now, just expect the 134 to be your support area, maybe into 133, maybe. 134 for sure. And then from here, targets could be a lot higher. Not sure where just yet, but likely in the vicinity of 135 to 137 for now, at least anyway. Okay? Yen did the same thing, the Japanese yen. It came back down, found support across this level, came up, tagged the crossing of the 8, the 50, raced higher, very aggressive today, broke out of that 98 area, right into 99, then you're still looking for maybe the one round number. There's still possibility for higher here, but that's a pretty sizable move. Again, the 50 is declining, 20 is rising, so there could be a pause before, so let this catch up, and then another thrust again is quite possible. With treasuries up, the dollar down, gold was up, and it was a decent move. There's still resistance into the 1280 area. It still needs to clear and close above that for this to actually remain bullish and get more bullish. Right now it's holding above the 50-day moving average as well as the 20-day moving average, but the 20 had crossed up over the 50. Good, nice golden cross. But the 50 is still declining and maybe starting to go sideways. So it'll be interesting to see what it does. Does it go sideways until the 50 flattens, or will it rise through 1280, dragging and pulling essentially the 50 higher? And we'll see how that goes. But right now it's kind of jammed between 1280 and 1235 for now. And when you look at silver, silver is still tagging the 19 level and did bounce today, but very much weaker in a range between 19 and 2050, whereas weaker in, say, sideways in this box formation, whereas gold has actually been rising. This has not. So this will be interesting to watch, because if this starts to catch up, this is going to race into 2050 in a hurry. So pay attention to that. Okay, then crude. If you recall some of the conversation, there were a cluster of moving averages, 8 rising, 20 declining, and below the 50, and the 50 kind of flat to rising. So a little bit of confusion. There's a dead cross weakening the intermediate trend, whereas prices were still going higher into the declining Bollinger Band. Now the Bollinger Bands are opening at least minorly. It went into the 99 target. 101 would be the ultimate target later, and then possibly higher. But right now, with the confusion of the moving averages, this could kind of go sideways for a while until things are kind of figured out. So watch for that. A little bit of a negative divergence at this level a couple days ago. That's why a little bit of a decline into these moving averages. It may go oversold before a bounce, so watch for that. And when we go to small caps, this is the IWM, the ETF for representative of the Russell, essentially small caps. So you can see, this is kind of the risk on sort of thing that I like to look at. Is that when risk is on, that means the markets are bullish. When risk is off, then bearish. So in this case, you can see there was actually a pretty good high that was made into 118, and then all of a sudden a falling off the roof occurred, boom, just like that. So a big flush to the downside, big downside 2 days in a row, then 5 days sideways, essentially, as we saw that with everything else last week, and then the big flush today into that next pivot area right here at 109 to 108 area. Again, a little bit of a bounce is possible, a little bit of a positive divergence, as you can see in the stochastics. So it's, we will see. But as I said before, this is not by any means the appearance of capitulation, panic selling. So if there's any bounce, it is an opportunity to sell into it. And looking for the next lower level would be 106 to 105 on this one. And then we have the VIX. The VIX, alive and well, for sure. There's your highs from before, last year, and then let me drop this down a little bit so you can see this better. So we had a couple of days of consecutive closing above the upper Bollinger Band into the resistance and window of the 1819 level. It pulled back a little bit above the 8, holding crossover the 20 over the 50 now. Still, those are still below the 200, but still bounce on Thursday, even higher on Friday, and then today, just screamed right on through 19, right into the 21 to 22 level. You see the gold lines I have across 21 and 22. Those are going to be the next levels where the pivots are based on the previous high. So this is an area right here where, with 1 day closed above the upper Bollinger Band, there could be a pause or a retracement. That's why I said there could be a little bit of a bounce. But if I think this is going to happen here is the markets may bounce a little bit and then flush again. That means the VIX will pause, maybe drop a little bit, and if it rises again, it could just blow through 21, and that's where ultimately we may get that panic selling appearance and the capitulation that I'm talking about. So with that in mind, here's the triple chart. We have the moving average as the put-call ratio here above. You can see that we've got to get over 1 ideally to truly identify, in most cases, the majority of the time, it's above 1 when you have the absolute capitulation, panic sell, and the sell-off is done and the market reverses. So we're still a little ways from getting there to that point. So that's why there could be a little bit of a bounce, more selling still, and this could just go straight up like we saw back here. It was just one straight shot, boom, boom, before it got into and above 1 and into 110 even. The middle part of the chart is the SPY, so you have the flush, and ultimately you see the little green arrow. That's where the reversal occurred, when that spike, as well as when the VIX goes outside the upper Bollinger Bands as well. So it's got 1 day now into a resistance area, as mentioned. We will see what how all these coincide. So above 1, with a reversal candle on the SPY and the VIX aggressively going through and closing above the upper Bollinger Band, where you're going to see a slingshot effect to the downside. So all that just changes, reverses, and we have the bottom in place. So that's what we're looking for. Keep an eye on it for that.